G'day and welcome to Motley Fool Stock of the Month. I'm Scott Phillips, the Motley Fool's Chief Investment Officer here in Australia. And we bring you every single month one Motley Fool buy recommendation. That's right, we pulled back the curtain just a little bit to give you a sense of the sort of companies we like, but most importantly, I hope, why we like them. We want to give you a sense of the way we think, we analyse, we invest. I think that's pretty important. If you're a member, hopefully it gives you some more information. If you're not yet a member, there's some method in our madness. We're hoping that maybe this might give you a sense of what benefit you might have from joining the Motley Fool. And more broadly, we're in the business of just education as well as stock advice, right? So whether you're a member, whether you're a non-member, we hope this is helpful. We hope this expands your investment horizons, this time quite literally. It's a long preamble, but I'm going to add to it just slightly and get back to that. I want to give you a couple of the usual boilerplate disclaimers. Firstly, this is a current buy recommendation, but it's a current buy recommendation at the time of recording. That is late July 2025. If you're watching this in August or September or 2028 or 2035 or however long YouTube's around, just remember that it was a point in time. Now, we're long-term investors. We do aim to keep these recommendations for the long term. That's what we're looking for, but it doesn't mean we will. If circumstances change, the price, the opinion of the analyst, the business fundamentals, then we may change our mind. So please keep that in mind. And then the other one, most importantly, is this is general advice only. Now, if that feels like a bit of a weird distinction, personal advice is where I say to you, hey, you should do this thing. But to do that, I've got to know about your needs and objectives, your circumstances, all that kind of good stuff. We don't do that at the Motley Fool. We give general advice, which is to say, hey, we like this company. We think it's a buy. But that means you are responsible with your personal financial advisor, if you want to, for deciding whether that advice is right and applicable to your personal circumstances. So, again, I know it's boilerplate, but it's really, really important you understand that. By the way, plenty of stuff on YouTube goes straight into the kind of, the big sell or the excitement, the flashing lights. We try and keep it real at the Motley Fool, so that's what we're doing. We're trying to give you all the information up front. Now, I mentioned broadening horizons. We're going to go across the Pacific, and when I say we, I mean me and Motley Fool Portfolio Manager, Chris Copley. Chris, g'day.
G'day, Scott. How's it going?
Mate, I'm very, very well, thank you. You manage our Stars and Stripes service, a name that's not particularly original, but of course we are talking about investing in the US. So while Motley Fool Stock of the Month almost always gives ASX recommendations, we're going to pull back the US curtain a little bit and talk about a company. I'm going to say I own shares in this particular company, so we'll do that. But mate, tell us about the business called Markel, which trades on the US under the stock symbol MKL.
Yes, absolutely, and disclosure, I own shares in this one too. So both of us. We don't always have calls where we both own something, so that's all. It's good to have. But I guess just to paint the picture a little bit for this one, Markel's often referred to as baby Berkshire, and I do have to say there are a lot of businesses out there who try to refer to themselves in similar ways, and then go out and act in a manner that's just so different to how Buffett and Munger operated. But I will say, though, there are a lot of similarities in how Markel does operate. There are some important differences as well, and we may get into some of these a bit later. But yeah, to essentially describe the business, Markel has three main segments. So the first is its insurance engine. So this is where the company operates in the property and casualty insurance market, but more specifically, they focus largely on more specialty insurance products. So, covering companies and individuals that need a customized coverage or they have unique risks, for example. Now, one benefit that insurance companies have is, unlike most businesses where you tend to incur most costs before you sell your product and receive cash payments from your customers, in insurance it's a little different. So most of the costs actually happen after you've already received cash from your customers. So in other words, if Scott wanted to insure his car with me, he'd pay me an annual premium up front. I now have this cash from the premiums that Scott paid. I can now invest this money, and there are rules and regulations around how they can invest this money to make sure that they have the available funds to pay Scott if his car gets hail damage or something along those lines. But essentially it means that I can make an additional return off this cash that Scott paid me up front until I need to pay any claims made by the customers. So the major cost for insurance companies is generally the claims that you have to pay, which can come at any undetermined time into the future. So yeah, the goal of an insurance company essentially is to first, ensure that the premiums that you receive exceed the operating expenses of the company, and as well as the claims I have to pay out to the customers. So hopefully that explains it, because insurance is really the main part of this business. So I think for anyone looking to invest in Markel, I think it's an important thing to understand. But that brings us to the second segment, which is its investment engine. And a big part of its investment segment is the investments that I mentioned earlier. So generally think, the high quality bonds and short-term investments that deliver reliable cash flows so that they've got liquidity and they can meet the claims requirements of customers as well, whilst also generating additional investment income on top of it. But the other major part to its investment engine is its very large portfolio of companies, of shares. And the company, it owns around 100 companies or so in its equity portfolio, and it makes up quite a significant proportion of its market cap or its business. So yeah, its equity investments are quite a large proportion of the business as well. And then the final segment is its Markel Ventures engine, and this is where instead of investing in a share of a listed company, this is where they acquire a controlling stake in private businesses. And this division started about 2 decades or so ago, and through investing in it and through, of course, growth as well, they've now grown it to be quite a material part of the business too. And they've have exposure largely in manufacturing and building services. They have some consumer products and retail here as well. So yeah, that's Markel. It's quite a diversified business, and yeah, it makes money in a lot of different ways.
So kind of part listed investment company, part insurance operation, the combination of that. As you say, like Berkshire Hathaway, of course, we're talking about the business that Warren Buffett famously runs, at least until the end of 2025, has made a name for himself and made a lot of money for investors doing so. So you're right, taking the insurance money, taking the proceeds from that, investing that hopefully well and creating value rather than just paying back the claims and shooting off the dividends. It's keeping some of that money and building a business inside Markel, a little bit like Berkshire did, taking some of those proceeds and finding great ways to invest the cash. Hence the description. Mate, you've given a great description of the business itself. Let's talk about why you like it as an investment. So we say regularly, great businesses can be terrible investments. Terrible businesses, generally not great investments, but there's that mix there. So let's talk about the company in the context of the investing opportunity. Why do you like Markel? Why do you think it's a buy for our members of Stars and Stripes?
Yeah, I think the obvious and most important thing that's just a must-have when it comes down to investing in a diversified holding company is that the business is run by an experienced team of quality capital allocators who, recognise the importance of culture and have incentives which are well aligned with their shareholders. And Markel, I think, meets this criteria perfectly, in my opinion. The Markel family is still represented on the board, even nearly 100 years after the business was founded. The CEO, Tom Gaynor, as well, has been with the company for a very long time, has been CEO for nearly a decade now, and has a fantastic track record of a very long period of time. Another benefit, obviously, is the company is well diversified in its own right, and they manage with a conservative balance sheet, which is something that I tend to prefer as well. The major part of the business that I think will drive its outperformance over the next decade is its insurance segment, and there's a lot to talk about here about its insurance business and why I think this is the case, but to keep this a little bit more succinct, essentially the track record of its insurance business over the past several years has not actually been up to, I guess, the scratch with the longer term track record and what we've actually come to expect from the business. And management's, I guess, one of the first to recognise this as well. Even today, the business is still in the process of righting some wrongs and clearing out some unprofitable policies and fixing operations. Don't get me wrong, results have still been, they've still been okay. In fact, what I will say is the business has still managed to increase its book value per share by more than 10% per annum over the last 5 years, and they've increased their operating earnings in the high teens per average on each year as well. So these are still very good results. So if you can make a lot of mistakes and still deliver returns like that, it's often a pretty good business to be in. But one area of the business which has been, of the insurance business in particular, which has been shooting the lights out is its international operations. And the CEO of the international operations, Simon Wilson, has recently taken over as the new CEO of Markel Insurance and very much seems to be getting things back on track. And, from things like increasing investments into its data analytics, which they've done in their international operations, and hopefully will start driving improvements across both the underwriting and also hopefully, managing operations a bit more efficiently in the US as well. Among other things, they've also been moving back towards their more historical decentralized type strategy, and they're looking to drive, I guess, better accountability through their individual teams, which is particularly critical in this industry and something that they had sort of shuffled away a little bit away from in the last few years, which could have been to the detriment of some of their results as well. If I touch on one more thing that I really like about the business right now, and that's its valuation. So whatever way you look at it, I guess, from competitor multiple comparison perspective, from book value multiples, which is what's often used in insurance companies, earnings multiples, some of the parts, the company under all these, I guess, valuation methodologies is at a very reasonable price. The way I like to split it out for the business is by separating its equity portfolio and the subsequent dividend income that comes from that business to the rest of the business to sort of get a bit of a sense from its value. And that's because its equity portfolio is not really the high conviction type bets that you see Berkshire Hathaway make, for example. I think Berkshire Hathaway at one point had Apple at nearly 50% of their holdings. So they were very high conviction in their favourite ideas for periods of times. Whereas Markel, they have more than 100 companies within their equity portfolio, and they have a bit of a value tilt. And they're certainly very active in the decisions that they make, but more or less I expect the return to be broadly similar to that of the S&P 500. So where they can deliver upside, if you're looking to beat the market return, I think really comes from the rest of the business. And by splitting this out, more or less we're about to get its most recent quarterly result, so it may change a little bit soon. In fact, the quarterly result may even come out after this update's released. But if you essentially split it out, the rest of its business is trading somewhere around 10 times net earnings. And when you look at the remainder of the business, I think there's opportunities for them to first expand their premiums and market share over time. I think there's upside on the current levels of insurance profitability over the long term that they're making. It will be cyclical, of course, but I think that there's continued upside for them to grow. I think there's upside on their investment income at the very least in the near to medium term. And I think the best way to explain this is, remember back a few years ago when interest rates were really low? Well, the company's still rolling off some of these investments as they mature, and they can invest in new bonds which pay higher amounts of income as interest rates are much higher today than it was a few years back. So the cash essentially that they'll get from these investments, I think, a good chance to grow over time. And then I think the longer term, its ventures business will continue to grow organically at modest rates as well over time. And when you look at the multiple of around 10 times or so that you're paying for this business, you really don't need much growth at all to justify the current price. So yeah, with Markel, you get a diversified business with a trustworthy and proven management team at a very cheap price. So I think there's a lot to like about it, particularly with US markets being a little bit more on the expensive side right now. Finding a quality proven business at this type of value, I think, is definitely worth looking at.
Nice, mate. You've got a very, very nice summary. By the way, you're a really complex business to get your head around. Chris done a lovely job of separating out those three parts and realising that sometimes an operating business is pretty easy to value, or at least easy to kind of think about valuing. The theory's not difficult. When you've got to take the individual bits and pieces and say, well, hang on, what's that worth? What's that worth? What's that worth? That's the work that Chris has been doing. So, mate, thanks for sharing all that. What we always do with our members, as you know, Chris, and our viewers probably know by now, is we don't just say, hey, here's what we like a company. When we do, and we do think it's a recommendation. So we don't try and be balanced in that sense of half and half, right? We're saying we like it on balance. But we don't ignore the risks that are particularly present in a business or an investment opportunity. So let's go to that one, mate. Let's make sure we do both sides of the coin. What are some of the risks? What are some of the things you're mindful of when it comes to an investment in Markel?
One risk when you have so many choices of ways to allocate capital, right, which is what Markel's got, is that you can do so inefficiently, and that will impact your returns. So for some businesses, you'd much rather they pay a dividend rather than invest the capital themselves. At least, as if you aren't comfortable in the returns that they can achieve from keeping that cash and investing it themselves. But Markel is a business where I'm very happy for them to retain that capital and invest it where there's an opportunity. But of course, this can come back to bite you if they don't do it efficiently. You don't get that dividend through the door to at least make sure that you're seeing those returns. Something else can happen with that capital, which could be wasted over time. A lot of Markel's ventures exposures, as well as in some more cyclical businesses that are exposed to the economic cycles, and in particular, some areas such as construction services, for example, they've seen quite high margins over the past couple of years. So perhaps some areas of its ventures business may not. There may be a bit of pressure on earnings over the next few years. If interest rates decline, of course, then this can also impact the business's investment income. On the flip side, the decline in interest rates is often a good thing for equity, so it can be a little bit of a plus minus different divisions. But yeah, ultimately in its insurance and particularly insurance investment income section, it will certainly that would be a negative, I guess, on overall returns from the business. And the major risk though is in its insurance operations, and the insurance industry is also very cyclical. It runs off a bit of a different cycle often to the economic cycle, but it can go through periods of increased price competition when it's when it's very difficult to increase premiums. And also within insurance, we're seeing a rising number of catastrophes across the world. And if the company doesn't adequately price for growing risks in these areas, then it could see pressure on its insurance profitability. Also, I guess it's probably worth noting with tariffs and other things going on in the US at the moment as well. Inflation, if it's not adequately priced into policies as well, can also cause its underwriting to become less profitable than they would have otherwise thought as well. So yeah, even though the business is well diversified, just like any investments, there are always risks worth considering, and in particular its insurance segment, there's a lot to think about.
Very true, mate. I'm going to get you to wrap it up in a second. Before I do, one more pitch from me. Viewers, please make sure you like this video. If you're enjoying it, if you got this far through, I reckon you're probably thinking, you know what, this Chris guy's pretty smart. The Motley Fool probably got some other smart people. I might want to have more of this. Do me a favour, hit the like button. Also hit the subscribe button. I know everyone says on YouTube you're supposed to do that. Here's why. We produce so much great content. 2 or 3 videos a week at least. Often a couple more. So make sure you do. If you're enjoying what we do and you want to see more from us, it's on YouTube. It's free. Hey, why not? Hit the subscribe button. And the notification bell beside it means that YouTube will alert you when we drop new content. Another stock of the month. We do it Stocks in Focus every single week. What I've been reading. Motley Fool TV. Lots and lots of good stuff. So if you're enjoying it, please do me a favour. Hit the like button, hit the subscribe button, and hit that notification bell. Chris, let's wrap it up, mate. You've done a great job already. Give me the elevator pitch. 30 or 60 seconds. Why should our viewers at least consider an investment in Markel?
So Markel's been a proven executor and market beater over a number of decades. Its valuation is very reasonable, its financial position is super healthy, and it's a well-diversified business with a management team that have plenty of optionality and ways to reinvest their capital, and they have a lot of market to grow into in its insurance business as well. So yeah, there's a lot to like about it. I think Markel has the potential to deliver attractive compounding returns for a very long time to come.
There you go, fools. You heard it here first, or at least here on YouTube first. It's been a recommendation of ours for a while. Inside Motley Fool Stars and Stripes. We might be reopening that service soon, by the way. So if you're keen, look out, check your inbox, check your announcements for maybe, I think we're doing it soon, reopening Stars and Stripes. We don't do it semi-regularly. Basically, we try and batch people in so we can look after them. And Chris does a wonderful job running that particular service. Thanks for watching. Thanks. Until next time, Fool on.